Alright guys, good evening. Okay, gonna make a little video here showing my weekly outlook for the DXY, EURUSD, GBPUSD, and maybe if I can just touch the USDJPY. But first, let's look at our economic calendar for the week and see exactly what we should be expecting, when and where to avoid trading, and where to expect the low of the week to form or the high of the week to form before expansion, and just to get our bearings in the sense that when the economic calendar is on our side, is on the side of your analysis, then you most likely stand a better chance to I don't want to use the word profitable, but rather having the market in quote going in your direction. Okay, so on Monday we don't really have so much to worry about. On Monday, GBPUSD will be most likely dormant because see, we're having GBP bank holiday on Monday, being tomorrow, and maybe sometime at about 3 p.m. Nigerian time we should experience some kind of movement. Okay, this is a medium impact news. In fact, wherever you see or hear me talk about a yellow folder news indicates very low impact news, and then the orange folder news are the medium impact news. They, as the name implies, they really don't have so much impact on the markets. Then I think on Tuesday, okay, we have a red folder, but on the card. For now, I don't have anything to do with anything card. Okay, I don't, so I wouldn't worry about this, except you do. Okay, CPI on Wednesday, but for the AUD USD, yeah, and all that. So most likely on every week when I open my economic calendar, I only concern myself with the medium impact news only and the high impact news, which are the red folder. So wherever, in fact, the only time and place I'm seeing a red folder is that would concern my trading would be on Thursday, 1:30 p.m. Nigerian time, which would be the 8:30 a.m. New York session time. Okay, so I think in here there should be a lot of movement. So if the low of the week, for example, if we're looking at buys, if the low of the week doesn't form on, say, Tuesday at about the 1:30 p.m., which would happen to be the 8:30 a.m. New York time, and then it means most likely it's going to be forming on Thursday. But if the low of the week forms on between Tuesday and Wednesday, then I think this should the Thursday price action here on the red folder side should be a springboard, okay, for swing traders. Okay, so basically that's just it for this economic calendar. So I'll just quickly switch over to my trading view. Okay, so here on trading view we have the daily chart for the DXY. Okay, sorry, I'm not feeling quite fine. It's cold here and I'm not just at my best, but then I'll try. Okay, we've been expecting lower prices on DXY and I've been preaching that for weeks now. So this on this daily chart, if you look very well, on this daily chart means each candle represents 1 day of price action. Okay, so if I put out my crosshairs here, okay, now I'm using my vertical crosshairs to I'm placing it on this black candle, which this black candle represents Friday's price action. The next one to the left, which is the big green candle, represents Thursday's price action, and the next one behind there represents Wednesday, and then Tuesday, and then Monday, and so on. So that of this Monday here, where you have my vertical crosshair, is where Monday started, and then so on and so forth up until where Friday gave us the largest expansion for last week. So if you see how last week operated and started and closed, I'm more concerned about how last week closed. You see, last week had its high. The high of last week capped on Friday. And how it did that, you see this high here, on this high here, this where I'm actually touching. That high represents previous week's high, and if I put my this in there, it's showing on Monday, but it's not quite accurate on this daily time frame. But once I take you to the 4-hour time frame, you're going to see that that particular candle represents a Monday. Okay, so a previous week's high was taken out by this high, and then after that manipulation that took out the buy stops. In fact, let me put a line there. It's nothing to put a line there and show you what I mean. Okay, so now that line there signifies buy side liquidity being taken. So after buy side liquidity got taken there on Thursday, and then Friday did it one more time, taking out buy stops above Thursday's high, and then this large expansion, followed up. And now the good thing about this expansion is that it gives us a proper bearing on price action for the next week, at least for the next 2 weeks. So now this large expansion on this daily time frame broke the low, here. Let me zoom in. It broke the low here of Thursday and closed below it. Okay, so that to me that's a proper shift in market structure to the downside. Okay, so I would take that to be a shift in market structure. So, and then after that, this Thursday's candle turned out to be our bearish order block, which I marked out here as D1 minus OB. D1 means daily time frame, and then minus OB means bearish order block. So what I'm expecting the markets to do something like this, to open today and then consolidate somehow. That would be the accumulation phase, and then expand up into this bearish order block area, and then finds something to support its resistance, and then the downpour should follow. So that's my narrative for the DXY. So now once that happens, what would be my target? I would be targeting sell stops, sell side liquidity below this low. This is an old week's low, and we have a whole lot of sell side liquidity below this low, and this low, and this area of this series of lows here. They are just relative equal lows, so we have a lot of sell side liquidity waiting below there, and then this low here also has a lot of liquidity below it. So that is what I'm expecting for DXY. Now this old month's low here, where we have this OML representing old month's low, yeah, I'm expecting the market to come down there, but not immediately. So but I would be gunning for, as far as DXY is concerned, I would be gunning for downside, sell side. Okay, I would be rather selling. Okay, and not like I trade the DXY, but since if I have a pair that has USD as the base pair on the currency pair, then with something like USDJPY, and then I would be rather selling those ones. And then pairs like EURUSD, GBPUSD that has USD as the quote on the quote side of the pair, I would be buying those. So let's quickly switch to Euro USD on the daily time frame. I'm sorry, I didn't take you down to the 4-hour time frame on the DXY, so I was more concentrated on the daily time frame. I'm gonna delete this shit and getting down to the 4-hour time frame. This is what the 4-hour time frame looks like. So now on the 4-hour time frame, everything I drew on the daily time frame are being transposed down into the 4-hour time frame. So just like it's just basically the same thing, but right here the daily order block on this 4-hour time frame doesn't really, it doesn't look beautiful. So on that note, I'd be expecting steeper retracement back into premium if I place my Fibonacci retracement tool from plotting it from this high of this current dealing range to this low here where I'm circling it, and then I'm pull it out, draw it out in time, and I'll be expecting the market to retrace from where it is right now into 50% level of the range and up into premium to at least the 0.62% retracement level on the Fibonacci retracement tool. And that's within that area. We have, see this black candle. This black candle that's our bearish breaker block. So we have a lot of confluence converging at that area of premium, which is a good sign, is a good thing for us. So I'm going to delete that. I'm going to delete this and quickly take us to the Euro USD daily time frame. Recall, I've been preaching higher prices on Euro USD, and here we have that. So same thing on DXY, just reversed on the Euro USD. So see this long expansion here. This long expansion that took place after an all week's low got taken out here. This sell side liquidity below this low got taken out by our last week Friday's price action before this expansion took place. Now this expansion has given us a proper outlook on where price would be likely going to, and which would strengthen previous analysis from previous weeks. We're still expecting higher prices. So now we have this daily bullish order block here, this black bold candle here. So I'd be expecting price to retrace from where it is into discount of this current dealing range into discount, which would have us somewhere around this daily bullish order block. So I'll be expecting price to do something like this, retrace into that order block, and then starts finding its way upwards to where we have our nearest and our next area of buy side liquidity. So the buy side liquidity we were talking about last week, which was above this high, got taken out by this high right there. So it was a beautiful delivery we had last week during last week's price action. So that area of liquidity got taken there. So I'll just shade this guy. Yeah, I'm just gonna make that area look like that. So I made it red so you could visibly see what I'm talking about, but I'm still expecting higher prices to come into play. And where would I be targeting? I'll be targeting the buy stops above this high, which I've drawn out here, and I tagged with the dollar sign. Okay, so it's dollar we're making here. So, and above that we still have other areas of buy side liquidity, but I don't want to be overzealous aiming from here to something as high as this. We'll eventually get up there, but maybe not in one stretch. So I just like scaling my profits in bits, scaling my expectations in bits too, and it's not a bad thing. So going down to the lower time frame, 4-hour time frame. Yeah, on the 4-hour time frame, it's pretty much the same thing. Everything I narrated and pointed out on the daily time frame have been properly transposed down to this 4-hour time frame. Now on the 4-hour time frame, we still have our daily order block levels marked out. In fact, let me show you something back on that daily time frame. Now on this order block, I first of all marked here the high of the order block. I marked it as D1 plus OB. And then the second area of the order block I marked is the body, where the body begins. I still marked it out as D1 plus OB, meaning daily time frame bullish order block. But this one in bracket I marked body. Why I did so was because anywhere between the high of the order block and where the body starts is a very sensitive area for price action. So anywhere between here and here, price can react massively there. And then the next area of the order block that's very, very, very sensitive is the 50% level. So you can choose to, depending on what you want, you can decide to plot your Fibonacci retracement tool from the low of the order block to the high, okay, to get your 50% level, or you can decide to plot your Fibonacci from body to body, okay. You still get pretty much the same thing, but sometimes, like for concepts like this, I prefer using the high to the low. So the 50% level is very, very, very sensitive, and as much as the levels between the high and the body of the order block. So that's why I did that. So going down back to the 4-hour time frame, so we pretty much still have the same thing, still expecting retracement into discount from where price is down to discount where would put us where we have our daily order block. We also have in here, we have, if you look here, this green candle here, that's our 4-hour bullish breaker block, okay. And if you look at this, I marked out something here, that clear white looking rectangle, that's a BPR, something like that. So most likely I'm expecting the market to retrace as deep as this, but it shouldn't close below this inversion gap. It shouldn't close below that inversion gap. But even if it sends a week below it, no problem. As far as it closes above it, it's still a good thing. I can trade that. Okay, so I just want the market to give me something near that. And then down here we still have this 4-hour bullish order block, which is this black candle here. So drawing that out in time puts us there. So we have that order block there. So take note. I don't want to draw that. I don't want my charts to look clogged by too many drawings. And then the 1 hour, I just prefer to stop my analysis, this particular analysis, on the 4-hour time frame. For the rest of the details I would need on the lower time frames, I'm going to look at them and I'm going to see them. They're going to get more visible as the days of the week run. So let's quickly get to GBPUSD. I see what GBPUSD has for us. So GBPUSD, recall the analysis I showed you guys, that from the weekly time frame, I've been expecting GBPUSD to bounce off of this weekly order block, which I drew out here, which is this black candle, okay. And it was a good thing how it reacted. Last week opened somewhere here, okay. No, it opened somewhere here, went up, and then manipulated down, and then closed above. So that was a good thing. So this particular candle forming here is this current week's price action beginning its phase. So I'm expecting looks clearer on the lower time frame. So going down to the 1 hour time frame. On the 1 hour time frame, what I see here still looks very beautiful, very beautiful. And if you're following me, you would tend to understand better, even the novices. So on the this daily time frame, see what happened. That Friday's large expansion came down and then dipped into this daily time frames fair value gap right here. And after it dipped there, that to me is a manipulation, and then it took off, expanding to the bullishly. Okay, so now that expansion has given way, pretty much simple, given us this order block, and then I'd be expecting retracement into discount, where we'd have that this bullish order block, and then another expansion should shoot up into this high where we have buy side liquidity, and then where we have this other side of this area of buy side liquidity, which pretty much is a relative equal high around here. So I'm expecting that. So once price gives me something like that, I'm going to seek an entry on these trades, on these charts, and you're going to see me do something. I'm going to execute. So going next to the USDJPY, pretty much self-explanatory. Okay, last week came, expanded and took out buy side liquidity above the previous week's high, and then expanded lower, giving us this bullish order block. So this bullish order block is what I marked out with this ash looking daily order block, this ash looking rectangle. So you see me writing, I wrote D1 minus OB there. Let me expand so that you can see and read clearly. So I'm expecting retracement into that order block. Okay, once I can get that retracement and a good signal to sell, I will most likely engage this. If I'm not too busy with GBPUSD or EURUSD or other stuffs, and then that expansion should bring us to this all week's sell side liquidity, at least bring us down there, and that should be a good trade. So that's it pretty much. And if it decides to expand way lower, I'm expecting this is what I'm expecting, how far I'm expecting it to go. See this fair value gap here. I'm expecting this market to be driven down into it. So now the brown looking rectangle is what the fair value gap looks like on the weekly time frame, and then going down to the daily time frame, I marked out the daily time frames fair value gap using this yellow looking rectangle. So where we have converging confluences like that, I most likely expect price to either run to it or expand or reject from it. Okay, so that to me is a good thing, but I would most likely collapse my trade at this all week's low, where we have this external range liquidity as sell side. So that's pretty much what I am looking at for this week. So I hope you found this insightful. Sorry, I'm not very energetic, and but it still makes sense. All right, thanks guys, all the best. Trade carefully if you're trading. Okay, if you want, use demo trading and just get yourself used to safety. Okay, shalom.